Okay, my name is Jayashankar. I am from Davangere University. My research supervisor is Dr. R. Shashidhar. So now my presentation paper title is evaluating the role of ESG score in shaping the financial performance of listed companies in India. First, I would like to give a brief introduction about my research paper. So the aim of the study is to decide whether a company return on asset or profitability is significantly correlated with the ESG. ESG means environmental, social, and governance ratings. It seeks to ascertain the nature of the correlation with whether positive, negative, or neutral. So, as part of the research methodology, companies included on BSC 500 index were examined in 2021. The ESG ratings were analyzed. The association between the ROA, ROA means return on asset, it is a dependent variable. ESG ratings are independent variable. As examined using the regression, so at 5% significance level, the data showed a negative correlation between the business performance as significance as measured by the ROA and ESG ratings. There would be a number of reasons for which the inverse relationship between the company performance and ESG scores. The business that support the relationship between the company performance and ESG scores. So they're like employee welfare, environmental compliances, which temporarily lower their profitability. Furthermore, the term investment will take the time to pay off, may be made by the ESG-aware business, which could influence the short-term ROA. Strict ESG guidelines could also discourage the specific investor or clients, which would reduce the revenue. So, on the other hand, robust ESG initiatives have the potential to increase the performance and reduce the risk. Okay, then I would like to some more information the sustainable practices in India. In 2011, the Ministry of Corporate Affairs in 2011 introduced the National Voluntary Guidelines, that means NVGs. So it is outlining the social, environmental, and economic responsibilities of business. The government of India initiated ESG reporting practices with the objective of aligning the investment strategy to the environmental, social, and governance practices, nothing but the principles, governance principles. The ESG initiatives have gained a significant prominence recent years. In May 2021, the SEBI, means Security Exchange Board of India, mandated that the top 1,000 listed companies disclose the sustainability related information within their sustainability report. This marked a significant shift in India's approach to ESG practices. This represents a marked departure from the BRR. Earlier, BRR means earlier we called it the Business Responsibility Policy Framework. Effective from 2000 financial year 2022-23, the disclosure mandate is regarded as a significant steps towards the evaluating the sustainability report to level commensurate with the financial reporting. So within this context, it is academically pertinent to examine whether the empirical evidence support the proposition, the sustainability disclosure affect the long-term financial performance of Indian listed companies, thereby validating the SEBI's ESG framework initiative. So this study investigates the relationship between the financial performance and ESG scores individually and also aggregative ESG score. This is about introduction about my topic. Then I would go through the PPT, the ESG scores and financial performance in India. An in-depth analysis of correlation between the ESG. ESG means environmental, social, governance ratings, and financial performance of listed companies. Then The next slide is second slide. Overview, the study overview, ESG and profitability. This study investigates the correlation between the company return on asset and ESG ratings, analyzing whether the relationship is positive, negative, or neutral. The main research focus is correlation between the ROA and return on asset and ESG ratings. The methodology means regression analysis we used 2021 ESG ratings for 34 BSC 500 companies from CRISIL database. We take the data from the CRISIL database. We will take the data. So next, key findings. The negative correlation between ROI and ESG at 5% significant. I take 5% significance level for testing the ESG ratings and ROI. The 5% significance level I fixed. So next, why the negative correlation? Why it is negative correlations will arrive the result means so in this there is inverse relationship between the ROI and ESG scores can be attributed to several factors. So increased cost. Why it is negative correlations will arise? So the reason is yes, increased cost. ESG initiatives often involve higher cost for employee welfare and environmental compliance, temporarily lowering the profitability. The next one is long-term investment. ESG-aware business make a long-term investment that make a time to yield returns and impact short-term return on assets. So next one is investors and client discouragement. Strict ESG guidelines might deter certain investors or clients, potentially reducing the revenue. So, however, the robust ESG initiatives can enhance the performance and reduce the risk over time through the improved sustainability and resilience. So, next, the rise of ESG in India. ESG factors have gained significant prominence in India, driven by the both domestic regulation and international pressures. In 2011, the Ministry of Corporate introduced National Voluntary Guidelines NVGs for business responsibility. Financial year 2022-23, the disclosure mandate the effective evaluating the sustainability report to financial reporting standard. In May 2011, the SEBI 2021, SEBI mandated sustainability disclosure for top 1,000 companies, listed companies. This shift aimed to align the investment strategy with ESG principles, validate the ESG framework. The next is theoretical framework. I go through the theoretical framework. So in this theoretical background is stakeholder theory and agency theory. The stakeholder theory means a company long-term success depend on the managing relationship with all the stakeholders. Means ESG initiatives enhance the reputations, improve the financial performance, and foster the sustainability by satisfying the employee and customers suppliers. So next one is agency theory. ESG principles align executive and shareholder interest, promoting the ethical practices, integrating the ESG factors, improve the transparency, accountability, and stakeholder involvement. So mitigating the principles agent problem and fostering the sustainable cultures. So research objective is the study aim to examine there is a relationship between the financial performance and ESG parameters in Indian listed companies. So the main objective is to examine the relationship between the financial performance of the listed companies in India and individual governance, social and environmental parameter, as well as the aggregate ESG score. I make a 4 hypothesis. First hypothesis is positive correlation between the overall ESG score and financial performance. Second hypothesis is positive correlation between the environmental scores and financial performance. Third hypothesis is positive correlation between the social scores and financial performance. Fourth hypothesis is positive correlation between the governance scores and financial performance. The methodology we used the data variables. So we utilize 34 companies in BSC index, BSC 500 index in 2021. So out the data availability is 100 companies data is available. Out of that, based on the it's purely secondary data. That's why Based on the data, I pick up the only 34 companies ESG scores and financial performance. In that data source says that 100 companies out of the 34 companies are shortlisted on the basis of data availability. Dependent variable in this article is profit after tax and market capitalization, and independent variable is ESG and overall scores. ESG overall score. So the next, the CRISIL methodology assess the environmental, social, and governance factor aligning with the weightage. We assign the weightage 35% for environmental scores, and 25% for social score, and governance scores is 40% respectively. So it is ranging from 0 to 100 will give the scores. So on that basis, the descriptive analytics. So in this, so whatever the main consideration is mean score. That means E scores 38%, we get the mean, and S means 47.912 mean, and G is 68 point. So this is the data available. So the governance disclosure is 68.559, and social score is 47.9. It shows the higher mean scores than the environmental scores, that is 38 points. So indicating that inconsistency across the ESG dimensions. So next, hypothesis testing. After the hypothesis testing, I got this result. So first thing, all the hypotheses are rejected. So first thing, simply we say that hypothesis one, the overall ESG, no significant influence on PAT because P score is 0.914. That we compare it to the environmental, this hypothesis also rejected. No improvement in the PAT, means P score is 0.889, and also social scores we also compare with that financial performance. In this also, so there is a P score is 0.712. So this is also rejected. Next, fourth one is also rejected. These findings suggest that current ESG efforts may not be fully integrated with the core business practices, leading to minimal financial impact. So why the reason is minimal financial impact by the ESG scores. So that's why. So finally, I conclude that the study conclude that company's profitability is not directly affected by the ESG sustainability scores. The relationship between the ESG practices and corporate performance is multifaceted, so indicating that no universal approach can be applied to all the firms. So finally, I conclude that so there is a industry specific ESG scores is required. Industry specific academic research is required. So that's why the company must balance the aligning with the ethical responsibility with the practical goals to avoid the financial setback from the rest of poorly planned ESG initiative. So finally, I conclude that so there is no standard ESG scores with the financial performance. There is based on industry specific, company specific. There is a ESG practices will be adopted. This is the final conclusion I would like to give in this paper. Thank you, sir.